Hey guys, Matt here. In this week's portfolio update, I'm going to talk about how I plan to get rich because of the crash, not in spite of it. To those new to my channel, I like to show my portfolio every week or every other week or something like that, as I think that sets me apart from other stock YouTubers. They may be a lot richer than me, but I show my receipts. So this is my portfolio. Yes, I know I own a lot of stocks. We'll get into that in a bit. That's part of the first reason. And yeah, there are some stocks on here that, yeah, look like that they look really awful, like ARK, Gevo, Palantir. Yeah, they've taken a beating. They've taken a massive beating since the start of this year, and last year as well. But I mean, it's not all bad. It's really easy to see the bad and miss some of the good. There are a lot of stocks in my portfolio that are doing really, really well. For example, Cisco. If you've been subbed to me since 2020, first of all, thank you. Second of all, if you've been subbed to me since 2020, you will note that at the lowest point, I was down 30% on the stock. Facebook, I was down maybe 20 or some odd percent back in the day. If you scroll down to here, Revolve. Now, yes, Revolve is over 50% down from its 52-week highs. It has taken a massive beating since November. But you will also note that I'm up over 240%. So, and this was a stock that in 2020 I was down a lot on. So I'm doing well. I'm doing pretty well in a lot of these stocks. Tesla is of course doing well. Tapestry, although Tapestry has taken a beating, it's so far a lot of my stocks are doing pretty well. FedEx is climbing its way up there. Intel is clawing its way back. Pfizer is really on the up and up. And yeah, like I said, most of my stocks are doing pretty well. My total portfolio value is $68,168.91, and I am 24.95% in the green. And so let's talk about the first way that I'm going to get rich because of the crash. Well, the first thing I need to do is I need to set myself up. And I'm not saying go out and get 18 companies. I have way too many companies, and I know that. But I also diversify. I know you've been hearing that term a lot, but it serves a purpose, even for long-term investors like me. Like, let's say, for example, right now Cisco is up a lot, and Bank of America is up a lot. Now we'll see what happens next week when they report earnings. But right now, a lot of my less growth stocks are actually up right now. Now, if I wanted to, I can rotate. Now, I don't like to rotate, but I'm just saying, because I diversify, that means some of my sectors are up while others are down. Like high growth companies, emerging growth companies, they've taken a beating, while more value-based stocks are on its way up. Like, for example, AT&T, it's been crashing all throughout 2021. And I gotta say, like, since the start of this year, maybe in December a little bit, while all these other stocks are going down, AT&T's been inching its way up. What I'm saying is what I could do if I wanted to, I could take Cisco, I could take profits on Cisco, and I can rotate that, I can sell it, and I can put them into some more conviction stocks like Gevo or ARK or Palantir. Now, I'm not going to do that, but thanks to me diversifying, I now have the option I can do that. So that's the setup. The second thing I need to do is to always have money coming into this portfolio. Right now, I have just over $2,000 in cash, and that's because, I mean, if you see me over the past year, I've been pouring money left and right into these stocks. And yeah, this is going to lead into the third reason a little bit, but in order for me to deploy money constantly into stocks that are on sale, like right now Gevo and ARK, like I have to have money coming in. So the last thing you want to do, especially in dark times like this, as far as the market is concerned, is to sell your stocks, bow out, and never return. You don't want to do that. So to recap, diversify so that you always have profitable sectors that you can rotate if you wanted to into undervalued sectors. Second thing is to always have money coming in from an outside source into your portfolio so that you can go into the third thing. Now, the third thing, and I know you probably heard this before from other YouTubers, is to load up on stocks. But we're going to go about this a different way, because I don't know if you've been in the stock market since 2021, but I mean, the stock market has been for a lot of stocks crashing since then, and especially now for a lot of the sectors. And I mean, I've done the same thing where, in the middle of 2021, oh, my favorite stock went down, like for example, Givo, and I thought it was low then, so I poured tons of money into it, only a month later to have it drop another 10%. And that kept going over and over, and I've been depleting my cash drastically. So we're going to go about this a different way. Just pouring money into your stock, just dumping money and loading the boat. That's not the play. I don't think that's the play in this market. Now, I've been listening to YouTubers like Financial Education and Tom Nash and stuff like that. And especially Tom Nash. I like what he said about what he thinks is going to happen throughout the year. Like whether you should, start pouring money into your undervalued stocks now or wait. And he talks about, the Fed hikes that are going to happen, and that may be the opportune moment, but we don't know that. We don't know where the bottom is. Let's take a look at the Dow, for example. If we take a look at the Dow for a 5-year, yeah, it's very easy to, in hindsight, to say, oh yes, invest all your money in here. That's what you should do. And if you look at a max, wait for that low, it's very easy to say, oh yes, invest all your money into here. Pour money here, pour money there. It's easy to look at all this stuff in hindsight, but let's take a look at the Dow right now. Hell, let's take a look at one of your chart. As far as the Dow is concerned, where's the bottom? Is this the bottom? How can you tell from here, from the future? Let's take a look at the NASDAQ. Where is the bottom of the NASDAQ? How much more do you have? I'm sure you can do technical analysis and come up with a hypothesis based on probability, but you have no idea. You can't account for surprise news that comes out. You can't account for what the Fed does or what the Fed decides not to do at the last minute. You have no idea when the bottom is, and no one else does. I mean, heck, there were many times in 2021 when a lot of people predicted that the bottom was soon or whatnot. Heck, remember Financial Education, he talked about tax loss harvesting. And I mean, I don't know. Like, tax loss harvesting is not a reason anymore, but everything still keeps dropping. So instead of me trying to time the market and wait for rate hikes and stuff like that, because the Fed has 4 rate hikes planned this year, assuming they stay true to their word, like which rate hike is going to be the bottom. So instead of me trying to do that, I'm just going to do what I call going in dumb. And that's just a fancy term I use for dollar cost averaging. Now, here's a play. What I'm going to do personally is take a portion of the money that I put in my Fidelity portfolio, and I like to put in $1,500 a month. That goes in line with the money I make from my first job and stuff like that. I put in $1,500 a month at the beginning of the month, and then towards the end of the month, if I have money left over, I put more money into the portfolio. And then from that, I put $250 into a stock. Now, the stock I pick has to have massive growth potential because that's the opportunity, and it's got to be down a lot. So I'm not gonna put it into a value stock or anything like that if the stock doesn't have growth potential. So when I first started this year, I started with $200 a week. I got a little crazy with Givo, but I mean, it's Givo. And then I really started my strategy on the 10th. So $250 I put into Palantir. I didn't spend money into any other stocks. And then that's what I'm going to keep doing going forward. So every week, $250 into a growth stock that it can't work with any stock. It's got to be a stock that I know has a future and has receipts. So no stock that I think is failing. So it'll either be Palantir or Givo, depending on the week, but I'm probably going to be focusing on Palantir. Now, that's my strategy, per week. Now, if I get to a situation where I get for example, a value stock like Cisco, and I've been thinking about Cisco, that I think it's close to its 52-week high, and I also have a stock that I also have high conviction that drops down a lot. Let's say Palantir. I think I saw an article from Seeking Alpha, Palantir to $5. If I see something like that, like I may have to rotate. I may have to take profits on Cisco and put that into Palantir. Now that's not my first choice. My first choice is to hold on to Cisco, but that's the whole diversification thing and why I have different sectors. Is for opportunities like this. But that's my plan going forward. And I think that as a stock as the stock drops more, I'll be buying more. So I'll be able to catch it as it drops. And then because I keep investing every week, once the bottom hits, if it ever hits, well, it will hit. But once the bottom hits, I'll still be investing. I mean, I will win no matter what. So diversify, keep money coming in, dollar cost average, and you will ride this crash and come out like a freaking titan. Absolutely. But anyways, take care, have a great day, and eat your vegetables.